Hey everyone, welcome to Bald Guy Money. As it stands today, silver is holding strong at the 6th position on the list of the 10 largest assets ranked by total market cap, not including real estate, of course. But as the market begins to turn over, and it is right now as we make lower highs and lower lows on the S&P 500, just as I said you should expect it to when I made that video about getting out of stocks and moving into precious metals not long ago, I'm aware that some of you are becoming concerned for the price of silver due to its link to industrial demand. So in this video, I want to zoom out a bit and talk about how the price of silver is developing, what I am seeing from the industrial demand side, and also talk a little bit about how concerned you should be about alternatives replacing silver in the future, and what all this means for the price of silver moving forward. And we're going to start this video by looking at the price chart for silver because there are a lot of clues to the strength of silver here that tell us where we are. And the first thing I want to point out is the fact that since topping out in price back in May at $26.14 an ounce, we are now making lower highs. And this is something that would usually be a troubling signal in a price chart indicating a downward trend. But the reason I say usually is because as we have been making lower highs, we are making higher lows on the price. And I have marked these here on the chart going back to June. And this tells us that we are in what's called a consolidation phase, much like we are in gold, by the way. And in a consolidation phase, as I have illustrated on this chart here, the trading corridor narrows and the price between the highs and the lows get closer to each other. And this is typically caused by a reduction in the number of sellers as well as a reduction in the number of buyers. And if we quickly switch over to the iShares Silver Trust SLV trading volume chart, which I understand isn't 100% indicative of the physical market, but it is the best data we have to gauge interest in silver investments, you can see that we're at 3-year trading volume lows. And for silver stackers, this is a really great sign. Because that lack of interest from casual stackers, we all know them, the people who are buying silver as the price is going up, that means that we are in the proverbial eye of the storm right now. And it's exactly why I am stacking silver right now, and this is where the story gets interesting. Now, just before I continue, I want to remind you all that if you're in the USA and looking to stack some gold and silver from a reputable dealer at a great price, don't forget to check out Pimbex.com. You have absolutely nothing to lose by checking out their website, and right now you can get a 1-ounce silver Austrian Philharmoniker at this amazing price. They are great coins and recognized around the globe. So that's Pimbex.com. You can reach out to them at the number on the screen, and I will share the link to this great deal in the video description. So, silver is in consolidation right now. Price action has been pretty boring. Hardcore stackers have stayed with silver, and the casual stackers who got scared have probably already sold out of it. And the question is, where do we go from here? And the answer is, there are two possibilities. After long periods of consolidation, the price of something either breaks down and makes a big move to the downside, or it breaks up and makes a big move to the upside. And from my point of view, we are more likely today to break up. And the first reason why is that despite strength on the Dixie Dollar Index right now, silver is holding strong. In fact, silver is currently trading 15% higher versus the last 2 times the dollar index was this strong. And as I've been saying here on the channel for a while, as the dollar reverts back to its mean, which is around 95, and you can see we are above 105 on the index today, expect to see the price in metals grow due to the general inverse correlation between the dollar and metals prices. Meaning, from my point of view, there is already a 10% upside built into the price of silver based on my thesis that the dollar cannot remain as strong as it is now. But that's just the beginning, because as I alluded to at the beginning of the video, industrial demand is also a major factor impacting the price of silver. And that's why I am regularly keeping an eye on the PMI manufacturing index. Many of my long-term viewers will be familiar with this, but for people who are new to the channel, this index tracks manufacturing activity, and anything below 50 indicates contraction. And in past videos, I have illustrated that when this index is performing poorly, when manufacturing is contracting, it usually coincides with a local bottom in silver price, and that's 80% of the time. And it's in moments like this, when manufacturing is weak, retail investment interest is low, and I've already demonstrated that it is. It's moments like this we should be stacking. This is where the deals are. Because once we break out of the current consolidation, there isn't much in the way of us surpassing $30 an ounce. It will happen quickly, and when it does, you'll find that the really attractive dealer premiums will have already disappeared. And the same thing applies to gold. Now, if we zoom out a bit more on silver, demand is expected to grow. And if you look back at some of my older videos, I was one of the first people talking about 2026 being a pivotal year where the pressure on supply is going to increase radically. In line with that, I revised my outlook on silver demand, and here's a snapshot of that from a Patreon video I did, breaking it down in detail. You can get full access to that video by joining the Patreon. I'll put the link in the description and the pinned comment, because I understand this data may look a little out of context, but what I want you all to focus on is that we will likely be reaching demand of 1.4 billion ounces a year by 2026, where we're really only taking 1 billion ounces out of the ground per year right now. And alternatives that I keep hearing about in the comments section here on YouTube, and here's a list of them, are either less efficient than silver in doing the job that's needed to be done, and that's in the cases of copper, aluminum, and tin, or they're too expensive to produce with little progress being made to scale up production, as is the case with graphene. So, if you're a silver stacker and you're waiting for better prices, be my guest. I can't tell you what to do with your money. But I can tell you that when I read the tea leaves, I still see opportunity here. And 2026 isn't all that far away. And when we get there, we could easily see silver above $50 an ounce or as high as $60 an ounce, which is my 2026 price target. Now on to our viewer question for this video, and this one comes from Shannon Phillips. And remember, if you have a question, you can put it in the comments section and it may appear in a future video. And this is a recent comment I got to an older video of mine where I talked about copper. And you can tell it's an older video because of the funky thumbnail picture here. But Shannon asked, and I'm going to paraphrase it a bit, if there is a financial collapse, wouldn't copper be good to have? And that's a great question, and it's why I chose it even though it came from a little older video, because I have strong arguments and thoughts on this topic. Many people get confused when framing metals in terms of money, because many different metals have been used throughout time, and copper is one of them. But what we have to keep in mind, and this is even handed down to us from the Bible, is that gold and silver are the oldest forms of money. They are God's money. And why copper was used, even in the time of the Romans, was because they needed a base currency for the regular population, something that existed in abundance to make the smallest purchases, whilst reserving gold and silver for more important transactions. But what we also know from the Roman example is, the more they used base metals like copper, they used it in the form of bronze back then, the more they used it to debase silver and gold money, the worse things got for them economically, because many people, even back then, didn't recognize its value in the same way they recognized the value of gold and silver. And today, copper is used almost exclusively in industry, and when stacking physical copper in preparation for an economic collapse, you have to ask yourself the question, who is going to accept the copper and at what value? And my answer is, very few people would recognize its value because of its abundance. And considering its value both today and throughout history, it's a very inefficient way of storing wealth, and that's why I stack gold and silver. That's it for this video. I thank you all for watching. As I always say at the end of my videos, take care of yourselves and take care of each other. I'll see you in the next one. Goodbye.